everyone, welcome back to the next episode in our stock prediction series. Today we are diving deep into HIMS and HERS Health, ticker symbol HIMS, a stock that's up 134% year to date. In this video, I'll share my 1 year and 5 year price targets, break down the business model, and walk through technical analysis to help you decide if it's a buy right now or if you should wait for a better entry point. If you are new here, don't forget to check out the link to my stock prediction spreadsheet in the description, where I track all my forecasts, my returns, and whether or not I hold positions. I update this sheet regularly, so it's a great resource for long-term investors. You can find the link in the description below and feel free to bookmark it and follow along. Let's first understand what HIMS does, because knowing the business is key to predicting where the stock is headed. HIMS and HERS Health is a telehealth platform that offers personalized wellness, primary care, and mental health services. Their business is subscription based. They have built a recurring revenue model around affordable, accessible healthcare solutions. They sell treatments for things like hair loss, ED, mental health, skin care, and weight loss, all through a simple online process. And here's what's interesting: they have built strong brand equity with millennials and Gen Z consumers who prefer digital first experiences. In other words, HIMS isn't just a healthcare company, it's a direct to consumer tech company in the healthcare space, riding the wave of digital transformation in this sector. All right, now let's look at their revenue. From their revenue breakdown, the online revenue came out at $576 million. This makes up 99% of their total revenue. That includes subscriptions, refills, and product purchases from their platform. And the second one is their wholesale revenue. That's about $9.6 million. It's a tiny portion from third party sellers or partner platforms. So, yes, their entire business is built around the digital experience and recurring income. Now, let's look at their operating expenses breakdown. The first one is marketing and advertisement, which is about $231 million, by far their biggest cost, which makes sense since they are a business to consumer company. And the next one is general and administrative, which is about $48.6 million. And the last one is R&D, which includes technology and development, and it's about $30 million. So as an investor, I'd like to see marketing spend decrease as a percentage of revenue and more leverage on the general and administrative and R&D side as they scale up. Now let's look at their balance sheet. They have a total cash on hand of $275 million, total debt of $63 million, and free cash flow of $236 million, which is impressive. That's a very strong balance sheet, low debt, and lots of liquidity, and especially flexibility to expand. It appears to me that fundamentally HIMS is strong, and their total cash on hand, debt, and free cash flow makes this company with ample liquidity, low leverage, and strong cash generation. But let's also look at the risks first. Here are some of the key metrics investors should watch for improvement. The first one is subscriber growth. Are they retaining users month after month? The second one is gross margin trends. Improving margins will show pricing power and operational efficiency. The third one is marketing efficiency, lower customer acquisition cost as a percentage of revenue. Fourth one is their EPS growth. Are they on track to hit 36% annual EPS expansion? And the last one, their new product verticals. Expansion into new categories like weight loss drugs or mental health can boost their revenue dramatically. Before we move on, if you are enjoying this breakdown, please like the video and consider subscribing to the channel. That helps YouTube share this video with more investors like us and support the work I'm doing to bring you this analysis. I truly appreciate it. All right, now that we know the company business model and their balance sheet, let's get into the numbers. HIMS is currently trading at $57, and using my prediction model, which includes current EPS, which is at 68 cents, estimated EPS growth rate at 36.3% annually, and current PE ratio, which is 84.3. My projections comes out to 1 year price target of $78. That's a 36% upside from today's price, and 5 year price target of $269. That's a whooping 368% upside. Now, a quick personal note: I do not currently own any shares of HIMS. I did previously buy HIMS at $24 and sold at $50. Solid 100% profit. That trade is cleaned up from this account now, but I did hold about 200 shares in another account and I exited after this big rally. So Do I still believe in it? Yes, I think it's a screaming buy because it's fundamentally very strong. Now let's move on to the technicals, and this is where things get interesting. HIMS is trading above all major EMAs and has been in a strong uptrend since the April lows. However, earnings are coming up in early August, so I'm personally holding off for now. I prefer to buy high quality companies when they are undervalued, ideally around or below their 50-day or 200-day EMAs. And with HIMS already up 134% year to date, I think the risk outweighs the reward at current levels. Remember, this stock has seen wild swings already this year. It dropped over 20% twice, so I wouldn't be surprised if we see another sharp pullback before the end of the year. Also, keep in mind this is a healthcare stock, which means it's heavily dependent on partnerships and clinical trials. If one product or partnership fails, it can hit the stock hard. So, yes, high risk and high reward. Just not the kind of risk I like to take. Still, fundamentals and technicals both point to upside, and I really like the setup. Alright, to wrap up, HIMS does have strong fundamentals, solid uptrend, but near term risk due to overextension and upcoming earnings. For now, I'm staying on the sidelines, but I'll be watching closely for a dip to buy in. The stock is in a long term uptrend. It's showing real strength both fundamentally and technically, but the volatility and sector risk make it a high risk, high reward play. If you like this breakdown, don't forget to like the video. And if you want more predictions like this, subscribe and turn on the notifications. Also, check out the stock prediction spreadsheet in the description. I've included my forecast, average prices, returns, and even upcoming stocks I'll cover in future videos. Let me know what you think of HIMS in the comments. Is it a buy right now for you, or are you waiting for a pullback just like me? Thanks for watching. Happy investing, and I'll see you in the next video.